Welcome to The Explainer. We're going to tackle a massive question today. Our world needs trillions of dollars for new infrastructure, roads, bridges, you name it. That money has to come from somewhere, right? But what if the answer isn't in Wall Street, but in the digital world? Let's dive into how blockchain technology might just hold the key.
All right, just look at this number for a second. $15 trillion. It's kind of hard to even wrap your head around, isn't it? That's a 15 followed by 12 zeros. And nope, that's not some tech company's crazy valuation. It's a problem, a really, really big one.
So where does that number come from? Well, according to the Global Infrastructure Hub, that $15 trillion is the gap. It's how much we're short on funding for all the stuff that makes our world actually run. We're talking roads, power grids, internet, all of it. It's the foundation of everything, and we are coming up way short on the cash to build and fix it.
So the $15 trillion question is, where on earth do we find that kind of money? It is a huge challenge, for sure. But the solution, well, it might be hiding in a technology that's already turning finance upside down, blockchain.
And that solution really starts with this one big idea, tokenization. Now let's be super clear here. We're not talking about buying cryptocurrencies like Bitcoin. We're talking about using the same underlying tech to do something completely new with real-world stuff.
So what even is tokenization? The World Bank puts it pretty simply. It's converting the ownership rights of a physical asset into a digital token. Okay, think of it like this. Imagine you have a giant billion-dollar bridge. Instead of one company owning the whole thing, you could digitally chop up that ownership into millions of tiny little shares, or tokens. And each token, which lives on a blockchain, represents a tiny piece of that actual bridge.
And you might be asking, okay, but how does that actually work? Well, it's basically a three-step dance. First, you get that bridge professionally valued and audited. Totally legit. Next, you create something called smart contracts. These are basically agreements written in code that automatically execute themselves in the blockchain. And finally, you issue the digital tokens based on those rules and send them out to investors, wherever they are in the world.
This is where it gets really powerful. See, tokenization isn't just a techie gimmick. It brings some serious superpowers to the party. It's way more efficient because it automates so much. It's super transparent since every transaction is on the blockchain for everyone to see. It can take something you can't easily sell, like a bridge, and make it tradable. And here's the big one. It democratizes access, letting way more people invest by breaking a huge project into tiny, affordable pieces.
But you knew there was a but, right? With any powerful new tech, there's always a giant hurdle to clear before it can go mainstream. And that hurdle is regulation. Right now, there is a full-on global race to write the rule book for this stuff.
According to a big report from PwC, the Wild West days of crypto and digital assets are coming to an end. The world's financial heavyweights aren't just reacting anymore. They're trying to get ahead of it, building frameworks for clarity and safety. And that's the key. This isn't happening in a bubble. All the major economic powers are racing to set the rules at the exact same time.
Let's start in the United States. For a long time, the approach was kind of messy, what people called regulation by enforcement. Basically, you'd find out the rules when you got sued. But that's starting to change. There's a real move towards creating a clear rule book from the start, and finally figuring out who's in charge of what, the SEC or the CFTC.
Meanwhile, across the pond, the European Union has really jumped out ahead. They've rolled out this landmark regulation called MiCAR, that's markets in crypto assets. It became fully operational in December 2024, and it creates one single set of rules for all 27 countries. That provides a huge amount of legal certainty.
And you absolutely cannot count out Asia. Financial hubs like Hong Kong are moving incredibly fast. Their goal? To become the global leaders in this space by creating their own solid frameworks to pull in the best ideas and, of course, the money.
So if we pull back for a second, you can really see the global chessboard. You've got the US finally moving towards clarity. You've got the EU with its comprehensive rulebook already up and running. And you have Hong Kong making an aggressive play to be the world's virtual asset hub. Three huge players, all taking slightly different paths to get to the same place.
And all of this, it all boils down to one fundamental challenge that every single one of these regulators is facing. It's a tightrope walk. How do you create rules that protect people's money and keep the financial system stable without accidentally killing the amazing innovation that makes this technology so exciting in the first place? The whole world is watching to see who can get that balance right.
Okay, so we've got this global race for rules going on. But what's the end game? What is the ultimate goal here?
It's not just about using a new tech gadget for a few projects. It's about creating a completely new blueprint for a global market. The World Bank really hits the nail on the head here. This is not about the short term, it's about the long-term vision. It's about paving a new road, literally and figuratively, for how we fund the building blocks of our entire society. To really get the scale of this, the World Bank offers this amazing parallel. Back in 2008, it issued the world's very first green bond. It was just one transaction. But that one deal created the blueprint for what is now a $1 trillion a year market for sustainable projects. The idea is that the first major tokenized infrastructure bond could do the exact same thing, creating a new model to help solve that $15 trillion problem we started with.
So, here's the bottom line. The real potential of tokenization, it isn't about funding one bridge or one power plant. It's about creating an entirely new kind of market, one that's more global, more efficient, and most importantly, more accessible to everyone, for building the future of our world.
Look, we've been talking about trillions of dollars and global regulations. It's all very high level. But let's bring this right back down to earth. What could this whole financial revolution actually mean for you, where you live?
Just think about it for a second. If this technology can tokenize a massive bridge, why not a local school or a community center or that clean energy project down the street? This could transform these huge abstract financial markets into something tangible, something you could actually invest in, a piece of your own neighborhood. So the question isn't just can blockchain build our future anymore? It's will we build the right rules to let it?